Hello friends, welcome you all. I am Sundar from Symphonia Wealth. Have you sold your property recently? Did you make any capital gain? And if you have made a capital gain, what are the opportunities for you to invest so that you can actually save some part of your tax? So there are few options available for you to save tax. I am also going to tell you one more option which is out of the box, which can help you to think and evaluate all the options available in front of you. The first obvious option is if you have sold a property and you've made a capital gain, you can reinvest the capital gain in buying another property, which means you can actually end up saving your tax. The next obvious option is investing in a capital gain bond. So these are bonds issued by REC or your NHAI or a IRFC or a PFC. These are Navratna companies which are designated to take money under section 54EC. In fact, they are called as 54EC bonds, where an individual can invest up to a maximum of 50 lakhs per financial year. If his capital gain is up to 50 lakhs, he can use this bond, or if his capital gain is even more than 50 lakhs, say he has made a gain of say 75 lakhs, up to 50 lakhs he can invest and he can actually save tax to the tune of 50 lakhs. So this is also a very popular way of investing your money to avoid paying capital gain tax on your property sale. So the 54EC bond is very attractive because one, the money is actually liquid, because on the other option where you buy a property one more time, which means at some point, of course you have saved tax now, assuming you sold a property A and you bought property B. Now at some point you will have to sell this property B, where assuming you made a capital gain, then again you buy C and etc. Which means you are constantly in the loop whereby you are continuously saving tax, but you are not seeing the money in your hand. So at some point you will have to break this loop so that you can actually get the money in your hand. So that's where a capital gain bond comes as a very good option, because it's locked only for 5-year period. But the disadvantage here is, though it is very secure and it can save tax, but the biggest disadvantage here is, one, the rate of interest is very low, which is just 5% every year. So a corpus of say 50 lakh, which is the maximum amount if you invest, if it is earning only 5%, then the interest is very low. On top of it, the interest is taxable, which means if you are on a 30% tax slab, that means your net return will be just about 3.5%. which is as good as your savings account. So these are very big negatives, if I have to call it. And the other biggest could be your money is locked for 5 years. So whatever happens, you will not be able to access this money. Of course, it will save tax, but you will not be able to access money. So is there a better way, or is there any other way of making good whatever is the capital gain tax which you have made? So yes, it is possible, provided you can look at slightly longer term. So I have just made a comparison. So assuming you invest in a capital gain bond 50 lakh rupees, that means after paying tax, assuming you are at 30% tax, your net corpus will be at the end of the 5th year will be close to about 59 lakh or so. Assuming instead of investing in the capital gain bond, okay, and not even buying another property, you decide to pay the capital gain. Which means if you pay the capital gain on a 50 lakh capital gain, say at 20%, that means you will have to pay a tax of about 10 lakh rupees. Assuming you invest just the 40 lakhs or the 13.5 lakhs, what is left over with you, and if the money can even grow at about 8.5-9%, it will actually break even. In fact, it will mature at the same amount of 58,75,000 of a capital gain bond. Which means if the money can even grow at 8.5-9%, you can actually break even. And in today's interest rate, we know that your FDs itself is giving you returns close to about 8-8.5%, which means achieving this return is not a very difficult task. Assuming you can actually generate a little more return by investing in a mutual fund or something like that, where your money can actually grow at about say 12-14%, that means you can actually make 10-12 lakhs more than the REC bond even after paying a 10 lakh capital gain tax. So which means this is also a very good option to look at. So why do I say 12-14% is because I have just shown you a very interesting chart of rolling return of a mutual fund, assuming you are investing in a flexi cap, which is a very diversified fund, which is one of the best ways to invest. So if you invest in a flexi cap fund over a 5-year rolling period, which means at any 5-year given point of time, your average return is close to about 13.5%. And 70% of the time, your returns are actually above 8.5%, which means there is a high probability you will be able to beat this REC bond or a capital gain bond in terms of returns. So just to conclude, I'm not saying that you should not invest in a capital gain bond and move the money into a mutual fund, but all that I'm trying to tell you is you can actually think a little more open so that you can actually evaluate all the options available in front of you so that you can actually choose what suits you and take a very informed decision. And it's not that you will have to just hold it for 5 years. In fact, many of the times you can actually hold it for a 7-year or a 10-year or a 15-year period also, which means your returns will be actually much more and you can actually create a lot of wealth for you, and also the money is always accessible to you. Even if you invest in a capital gain bond, at the end of the 5th year it matures, and what will you do with that? Again, most likely you will invest in something. So if you can actually do that straight away at day one, you actually gain a lot of time for the money to grow. So I thought this will be a very interesting opportunity which you should get to know. Of course, whether you want to invest in a mutual fund or invest in a capital gain bond or invest in a property, the decision is yours. But there are so many options available in front of you so that you can take an informed decision. Hope you enjoyed this video. Thank you for watching.